Hey guys, welcome back. This is Twisted here from 𝗠𝗥𝗏𝗧 and I will be going over Ethereum for a market update, end of the week, and for what we're expecting for the upcoming week. So initially, we'll jump onto the weekly time frame and we'll have a look. So initially, when I look at the weekly time frame, I see two important swing points, which will be this high that was formed back in March 2022 and this low that was formed back in June 2022. All right, so these are points that are just a bit too far away from us at 35.80, and this low is 878, and since then we have been just trying to push back up. This is on the weekly time frame, so I do understand that this is a bigger time frame, but to get a higher time frame narrative and also a longer term time frame bias, we try to look at the macro time frames, and then we go down into the smaller time frames just to get a better idea of where price might be getting to and what we are expecting for the upcoming weeks and so on and so forth. So initially looking at this time frame on the weekly, we just drew a fib of 50%. So in SMC, we have a premium in the red and the discount in the green, and 50% of the fair value for institutional buying. And looking at the price on the 50%, we are looking at around 22.26 is the price that we are looking at for fair value buying, and institutional market makers will try to push the price up, and then we may further travel back up. But that's the initial drawn liquidity that we look at for the upcoming weeks. So, and looking at the further market structure on Ethereum, we see that this market structure break on the weekly will be a very significant market structure break, and we do have an impulse candle break up, and this was back in April. So this tells us that the market has turned bullish and we are expecting higher prices, and at the moment we are in a downtrend or a pullback phase on an uptrend market, which means that here we have a bearish engulfing candle, and then since that we had two indecisive weeks, and then we had a bearish week, and now we again have two indecisive weeks or doji candles. We do understand we have 2 more days to close this weekly candle, but so on and so forth from there. Looking at the internal breaker structures on the weekly, this we tried breaking up, and finally around 13th of March we broke above that, so that will be our internal breaker structure. And there we go, and this is the low that we are still holding strong. So this will be noted as false low, so which hasn't been taken out yet, and this will be the most immediate high that we are expecting to be run if we are expecting bullish prices. Now, this is the larger macro time frame swing that we have marked out, and since then we are looking at this this structure, and price is starting to push back up. Now we have a break of structure, and now price is pushing back down. So the easiest way to work with this will be we grade the swing into 2 from here as well, and we use the same 50% of the fib to mark out what our interest zones are or interest levels are. Initially, as we look at this, price did manage to come to the 50% of the swing, and we did reject and snap back up into the premium side of the range where we are seeing sideways price action. So this is what we have on the weekly time frame. Zooming further into this swing, we see we have a fair value gap around here on the weekly time frame, so we'll mark that out, and we have one initial tap, and then we push further up, so we can definitely see some bullish price action once we get down into that zone. And that will look something like this, and we go mitigate that. If we're going to fill the whole inefficiency, will come down here and then we push back up, or we can come further down into the wick. So to mark that out, I would like to see some good rejections around the 50% of that wick as well. So that will be around 𝗶𝗱-𝗱𝗲𝗽, and we may see some bullish price action if we drop further down. But at the moment, I would like to see price come further down, mitigate these zones, respect the lows, and then we start pushing back up, at least on Ethereum, as this will be our drawn liquidity for the weekly time frame, and then this will be the institutional buying for the 50%. So this is what we have on the weekly. I'll just mark this as weekly so we keep track of that as we further drop down into this lower time frames. So dropping down into the daily time frame, what do we see here? So just to clear things up around here, this was the weekly weekly breaker structure, and also a market structure break on the daily. So we will mark that as that, and then we have market structure break on the daily. So there we go. So that's what we have here. Zooming into this swing here, we can see massive inefficiency that was tapped, and we saw further price action onto the downside. So this can be here marked up as a fair value gap. I like to personally work with fair value gaps as they are market's easiest target, as price will always like to come and rebalance itself or fill up inefficiencies. So they are good target points where we can look for good price action, or at least draw for the upcoming days or weeks or whatever time frame you're working with. So this is our internal breaker structure that we saw on the weekly. So we can mark that as internal breaker structure for the weekly, and that will be the breaker structure for the daily. And we mark that as on top here. So on the daily time frame, we do understand that we are bullish, but we are in a pullback phase. As we had a massive push down, we started to push back up. We didn't have a considerable break. We had a false impulse, but then we pushed down, cleared the lows, and then we pushed back up into a point where we had breaker structure for the weekly, and then we are pushing down. So we are in the pullback phase. We will like to see mitigation of the lower levels before we start to push back up. So this is what I see on the daily, that we have an impulse up. Now we are coming back down. Some interest points for the daily time frame will be this. So this was the wick that we marked out on the weekly, which comes up into this bearish range, which gave us bullish price action. So we can mark out this whole range from the fractal high until the low. So this was our range that was built on the daily, and we can just mark this out as a range. So that was the range, and there was a midpoint for the weekly time frame, and also this is a balanced price range, so we can mark this down to here and there. So we can definitely do refine the price points up until here onto the demand side. Sorry, that was daily. There we go. So that will be the daily balanced price range that I'm interested in. And then further looking into the discount side of things, we do see two definite points of inefficiencies or fair value gaps, which do combine down in the same part of the range in the discount, and do see one more here, which definitely lines up. This was filled up at least to the 50%, and then we push further up. So that was a fair value gap on the weekly, and this is on the daily. So we do have now two important zones around the discount zone for the daily time frame, and we have some further deep discount zones. We can also look at OTE for the swing range, so we can have a better idea of where the prices will likely go. Where did it go? There we go. That's better. So we do have a 0.79. This will be, or just leave it as a little bit of better color, black. So this was just our weekly wick midpoint. So that 0.5 of 1465 will be our midpoint. We can remove that just for clarity, and we can also add 0.886 because prices do like to go down there, at least in crypto, for deep mitigation, and then that lines up perfectly with that order block and that fair value gap on the discount side. Okay, so this is what our bias is for, that if the price starts trickling back down, we can definitely see some mitigation. We do have mitigation on the 50% price is not pushing up that much, so we can definitely expect price to push further down. We can see reaction at 0.618, and if we want to see further deeper retracement and mitigation, that will be this before we start traveling back up. So this will be our bias for a daily at the moment, because we are in a bullish price action, because the lows are holding. That's the main reason behind our bullish bias for Ethereum. But short term, we may see some mitigation of the downside before further up move. Removing that, so we can zoom further into this. What else can we see? Okay, so looking at market structure on the daily time frame, this is the high that I can see clearly that was mitigated, was broken. This was another high that was broken. The lows were intact until they were broken, so these lows were taken out around here, all the way up until here. This is where the daily lows were taken out, and now we are in a bearish price range, or a dealer's range, where we have negative order flow, where we will see mitigation of the premium zone for the downside. Second thing we see here is we have relative equal lows that are combining up here, which will eventually be ran, and this will be our daily order block that was formed after the mitigation of the higher time frame fair value gap and daily fair value gap as well. So we do see price tap directly to the wick, and then we push down, but we do not see downside, or we do not see considerable downside with body structure breaks below that low. Hence, we may see further push up before we drop further down. So this is what I have on the daily time frame. And then, okay, do we cover everything? Hopefully, yes, we do have everything covered up. This is just 50% of the whole range that we are looking at. So we just remove that for now, and we go down to the 4-hour. Now, what do we see here a bit more clearly? Okay, so looking at the time frame, 4-hour time frame, this was our breaker structure on the daily. This was the daily breaker structure, which we did see on the 4-hour. We pushed back up further down. So right now, this is the high that was prominent, or the strong high that took the lows, and this is the low that is still getting respected, and we are seeing an uptrend from here to push into this higher time frame swing. Okay. Now we look at some important fair value gaps that are very prominent for the price range. So first thing I see is this fair value gap that was tapped once, where we saw considerable push down on the 4-hour time frame. So this is something that I would like to see mitigated, and if we are respecting that, we will see that being mitigated, and then we come further down. This will help us push further down. We do have more fair value gaps up in this range, so that there's a possibility that this will definitely be tapped as well, but this will be our initial 4-hour point, and this will be our next drawn liquidity. So that will be the 1933 level. So just remove the green to orange. So this will be our drawn liquidity for the 4-hour time frame. Zoom further back into this. So here we see a definite big breakdown on the 4-hour time frame. Here buy side was taken, price came back down, and the lower being respected. So this range is the range that started the push up, and we are respecting that range. So we mark that out on the 4-hour. Or people will try to just mark the last down candle before the up move. You can mark that as well. I like to take the whole range, because that gives you more area, more confluence, and a bit better understanding of where price will definitely go to mitigate. We can easily draw out 50%, and we do see a 50% mitigation, and then we are pushing back up. So this is a 4-hour range that we are playing in right now. So that will be from here to here. And then we can see whatever price wants to do from here. It can go up there, or we can see further push down. That can be a possibility for a 4-hour time frame. But this is our main swing at the moment, because we have taken out the buy side with with impulse, and then we push down, but we do not have bearish. We do have bearish price action here, but we don't have closure below it, which means the lows are being respected, and we can definitely see further price up before bigger move to the downside. So hopefully this was a little bit clearer on Ethereum, that we do have some upside, but we do have a lot of mitigation that's pending on the downside. A little quick thing I would like to also show for our Discord. We do send out trades, we do send out weekly analysis and updates for our group, and it's a fun community. Please come join us, hang out. It's heaps of education material available in there as well. This was something that I would like to show. So this was a chart that I posted for Ethereum on the 22nd. So today we are looking at 26th. That was 4 days ago. And my analysis for this I posted out was that we have swept the fair value gap of the March lows, and we are holding. We have a lot of buy side that is generated over the past week, and prices being squeezed from either side. So far, we have a macro bearish order flow. We are in a pullback phase on the long-term, lower time frames. Deeper discount levels are also potentially on the on the table to be mitigated for potential up move. But this is the last line is the most important one. Draw on liquidity is to the upside, but sweep on the sell side is on the table. So, and this was the price at that moment, 1814, and this was the analysis that I posted. And I was expecting this buy side to be taken, this area to be mitigated, all this, and then we pushed down because the lows were holding. That was my bias for the upside. I was not expecting price to go 1933, but I was expecting these highs to be cleared. And look, what do we have here? We did push up, buy side was cleared, and these areas were cleared. 1887 was not tapped. We did get to a very extreme level into this order block, and then we started pushing back down, and we come back down into this fair value gap again from the 28th of March. And we didn't close below, we just push back down, and then we snap back up. So this is the type of analysis that we generally post out on our group, so please do come join us. It's a fun place to be. And hopefully this was helpful. And I hope you guys have a good weekend, and take care. See you next time.